Great privilege to be here with Gwen Harvey. We are presenting Spill the Tea on homeownership.
Hello, everyone. We want to welcome you to Spill the Tea on Home Ownership. Today, we're going to spill the tea on how home ownership really works. When you're purchasing a home, there's no pressure from us, there's no sales tactics, just real information to help you make informed decisions for yourself and your family. Whether you're ready to buy now or just preparing for the future. This webinar will give you a solid foundation and the next steps toward home ownership. Who this webinar is for are first-time home buyers, renters thinking about buying, buyers with questions or concerns, anyone planning to buy in the near future. With this particular webinar today, what we will cover is the step-by-step home buying process from pre-approval to closing, how a realtor and loan officer guide and support you, understanding your budget, financing options, and true costs, the benefits of home ownership, and building long-term wealth. As I stated, my name is Gwen Harvey, and I am a licensed realtor with HomeSmart. I've been in the business for over 20 years. I'm dedicated to educating and empowering my buyers. I'm also guiding you seamlessly from start to closing. I am committed to a client first, no pressure experience. I'm quite sure many of you that may be on the webinar today, you're wanting to know the home buying process. The first step for buying a home is for you to get a pre-approval. You would want to get a pre-approval from a qualified lender in order to be able to decide on what your budget is for purchasing a home and how much home you are able to buy. Next, you would find a home that you match your needs and your budget. I would assist you in finding you a home. I would give you a list of homes in order for you to look at. We would go out and view the properties, and then you would decide on one particular home. You would have already had your pre-approval letter, so you would already know exactly the amount of home that you're able to purchase. The next step after you find your home, you would make an offer on that home. And an offer is just basically a meeting of the mind between you and the seller, and then it would become a contract. The next step after your offer is you would definitely have to have a due diligence period, which would require you to get an inspection for that home. And that is for you to find out if there's anything wrong with that particular property. If so, then that would be a negotiation between you and the seller. The next step would be an appraisal, and that appraisal will come from your lender. The lender would send out an appraiser, and they will appraise the property to make sure that the sales price of the property or the agreed price on the property between you and the seller would be sufficient for you to be able to get a loan on that particular home. And then the final step would be for you to close on your new home. There are documents and disclosures that you would have to sign. And once those things are done and you've gotten your final approval from the lender, then you would go to the attorney and they would go over all of the paperwork and you would sign everything. And then you would receive your keys to your new home. How I am able to help you first would be to identify homes that match your needs, your lifestyle, and your budget. You would have a guide that would show you step by step from your search to your closing day. As your realtor, I would help you negotiate on your behalf to help you get the best terms. I would also help you to coordinate with lenders, inspectors, and title professionals. Any questions that you have, I will be able to answer and also keep the process clear and stress-free. When purchasing a home, there are benefits of owning a home. One benefit would be to build equity over time. Building equity is a ready-made savings plan. And when you sell, you can generally take up to 250,000 or 500,000 as a married couple as gain without owning any federal income tax. Now, many of you may not know what equity means, but equity is an example would be if you purchase a home for 100,000 and you're able to sell it for 150,000, then the difference between the 100,000 and the 150,000 is your equity in that home. The next benefit of owning a home would be predictability. Unlike many that rent, your fixed rate mortgage payments don't rise over the years, so your housing costs may actually decline as you own as long as you own the home. Now, Corey will go over the finance mortgage differences as far as the rates and everything and the different types of mortgages that you are able to qualify for. Freedom. When you purchase a home, the home is yours. You're not renting anymore. You can decorate any way you want and choose the types of upgrades and new amenities that appeal to your lifestyle. I'm going to turn this over to Corey. He is the loan officer that is working with me, and he is able to go over the different requirements and guidelines of you purchasing a home. Corey?
Thank you, Gwen. Appreciate that. So how can a loan officer help you? Well, as has been mentioned, we want to calculate your true home budget. What does it really cost? Monthly. Remember, you're making the payment, not me. So it's very important that we reach and stay in that budget that you're looking for. Walk you through the pre-approval so you can shop with confidence. You'll know exactly what kind of houses are under your pre-approval so that you stay in that range and you find something that you truly can purchase. We'll break down loan options, interest rates, terms to find the best fit for you and your family. And we'll review your income, credit, documents to prepare you for approval. We'll guide you from application to closing, keeping everything on track. So I and my team do all of these things to help you navigate financing with confidence and offering expert advice, tailored loan options, and a smooth path from application to closing. So how do we shape your financial strategy? Well, one thing is to know the true monthly payment, breaking down your true monthly budget, not just home price, but the principal, interest, taxes, insurance, homeowners association, if applicable, etc. Cash to close. Help you understand exactly what cash is needed to close. That can include down payment, closing costs, reserves, or your escrow account that is set up in order to pay your taxes and your insurance. Then the loan strategy. Compare loan options based on your goals and identify low down payment opportunities that you may qualify for. We help you choose the right home loan, not just get pre-approved. Deal execution and getting you to closing. So we'll guide you through the application, also the loan estimate review, underwriting and closing, and the disclosure. We'll keep your loan on track, request to review documents, provide timely updates, prevent unnecessary delays. Then we'll advise you on decisions, when to lock in your interest rate, the rate, discussing loan terms after the offer acceptance. You'll work with a full team. We have a processor, an underwriter, an appraiser, a closer. We manage the process so nothing falls apart before closing. So let's talk about some myths and truths about home buying. One of the most common myths is that you have to have perfect credit. You do not need perfect credit. Many loan programs accept scores around 600. Some go even lower with compensating factors. In other words, you give something and then you are able to take a lower credit score. The lenders do that. So this is really important to know that you don't have to have perfect credit. We look at everybody and try to find out what they qualify for now, and if there's some small adjustments that can be made to qualify for something even better. Next myth. This is a big one. You need 20% down to buy a home. Many people believe that, but that's simply not true. Many buyers qualify with as little as 3% down, and some even offer zero down with eligible buyers. So the point here is that you don't have to save for years to buy a house. Many times we can find a way to get you in the house, and then you can have that money that you've saved up for other things like the decorating, moving. There's so many things when you buy a house, you want to put furniture in it and all these other things. And you can do that if you've saved money from that down payment that you needed to get into a house. Here's another big one. Getting pre-approved hurts your credit. A mortgage pre-approval uses a soft or limited credit inquiry and is essential. It actually strengthens your buying power and helps you to be able to shop with confidence. It's not something you can avoid because what can happen is you find a house you like, by the time you get the pre-approval done, you've already lost that house to someone else. So getting the pre-approval ahead of time will help you and it doesn't hurt your credit. Ooh, this is a big one. Renting is cheaper than buying. Rent typically increases over time, while a fixed rate mortgage builds equity and long-term wealth. So renting can be cheaper than buying at the moment, but over time, it's proved that buying is cheaper than renting because that rent goes up and that mortgage payment on a fixed rate, the principal and interest part is going to stay the same. Meanwhile, you're building equity and that long-term wealth that comes from being a homeowner.
This is how Corey and myself, how we work together in order to allow you to be able to get into a home. First of all, your realtor helps you. They help you find the right home, they negotiate the best deal, and they also guide you through offers and inspections. Now, in working with Corey together, we're able to coordinate timelines between your offer, financing, and closing date. We're also able to communicate updates, making you aware of what's going on through the process. We work behind the scenes with all parties to keep the transaction moving forward. We make sure you feel prepared, confident, and ready on closing day. Your loan officer helps you secure the right financing. They help you prepare and approve your loan. They also help get you to the closing table smoothly. So, both of us working together on your behalf will allow you to be able to go through this home buying transaction without, hopefully, without any stress. Not promising you there's going to be some stress, but we're going to try our best to get you through the process and make sure that you get to the closing table. So these are the steps in buying a home. First, you want to get pre-approved, going through Corey. You can set up a meeting with him. He's able to answer any questions for you and let you know exactly what you are able to buy. You'll know your numbers and you'll be able to shop with confidence. Next, you would want to start your home search. So once you get your pre-approval, then we will start looking at homes that you may have an interest in. And once you find the home that you're interested in, then the next step would be for you to make an offer. So I would help you find the right home, and then we would make an offer on that particular property that you're interested in. And we will submit an offer, and then begin the loan process with Corey. After you've done that, then once again, you would have the inspection period, you would have the appraisal period, and then you would finalize your loan. This is where your underwriting for your loan is complete and would receive a final approval. And then you would go to the closing table with the closing attorney. You would sign the documents and you would receive your keys. We are here to guide you every step of the way. So let's get started toward your home ownership this year in 2026. We're at our end of our presentation. We thank you for attending the webinar, and the floor is open up for any questions that you may have.
All right, so we got one about bankruptcy. That's a really common one. How long do I have to wait after bankruptcy? It depends. There's a variety of options. We have options for 1 day out of bankruptcy, 2 years out of bankruptcy, and even in Chapter 13, being in bankruptcy at the time, after passing 12 months of making payments on a Chapter 13, there's an opportunity to get a home loan during that process. So the best thing is to talk about that individually, and I would be happy to address that question.
Okay. And another question would be from someone that's renting. With their renting and they want to buy a home, would they be able to break their lease? And the answer to that would be they would have to check with their landlord, first of all, and then they also, review their contract with the apartment complex to see exactly what the terms are of their lease. Sometimes you're able to break the lease depending on your relationship with the landlord. And then sometimes there's a period of maybe 60 days that you might have to give them notice in order to break the lease.
Here's another one about work history. Sometimes you hear that you need to have 2 years work history. You do not need that in the same job. You can have different jobs in the past 2 years. If it's in the same field, that's great, but I've seen customers that are borrowers who have not had the same field that have also been able to get qualified for a home loan. Great
Okay.
question.
Another question would be why is it important for us to have an inspection? When you are under contract on a property, it's always good to have an inspection on the property in order for you to know the history of the property. That goes from, whether or not the roof is leaking, whether or not the foundation is bad, whether or not there are problems in the bathroom, the kitchen, whatever the problem may be, you want to be aware of those things so you're able to make a conscious decision to be able to move forward and close on that particular home. So an inspection is very, very important, and I would suggest that every home buyer, whether or not it's a resale or whether or not it's new construction, to have an inspection for the property.
What's the difference between an inspection and an appraisal? That's really a good question. So we can compare it to when you're trying to buy a used car, and let's say it's $10,000, and you ask me, who is not a mechanic, who does not know anything about how the car actually works, whether it's worth $10,000. I would look up on Kelley Blue Book or one of the other sites, and I would be able to tell you what that car is worth. But I am not a mechanic. If you take it to the mechanic, he can't tell you what it's worth, but he'll tell you if the engine's good, the transmission's good, the brakes are good, and so forth. So that's really the difference between an appraiser and an inspector. The inspector concentrates on whether the electricity is working. They even have this cool little thing that they plug into each outlet to make sure it works. They check out the AC, the furnace, the water heater, the appliances. Whereas the appraiser is more concerned with how many square feet it has, that it's livable or habitable, and what that is worth. So the bank is ordering the appraisal to make sure that what you're paying for the home is the right amount for the home, since that's their collateral. And that's important to you too in the negotiations. But the inspector is really looking out for you to make sure that there isn't a problem with the home. And as Gwen had mentioned earlier, it's always recommended to get an inspection because then you know.
Another question would be, is it better to buy a resale property or new construction? Well, it really depends on what you are interested in. Some people like older homes, some people like new homes. With the new homes, you're buying a property from a builder, and the builder basically have incentives for you to purchase the home. Um, Normally, they will, offer closing costs, for the new home. With a resale home, that is negotiable between the seller as well and the buyer. So it really depends on what interests you and what exactly you're wanting, whether or not it's an older property or whether you want a new property and everything is new. So, it may be some things that is in the older home that may need repairs. So it just depends on what your decision is.
So we get this question a lot. What are closing costs? Because you hear about zero down programs, but that doesn't mean that you can just walk into a house without paying anything. That's sort of the unicorn or rainbows and butterflies type situation. It happens. It can happen, but it takes a lot of planning and a lot of giving from the seller for that to happen. What normally happens is that if your down payment is 3 to 5%, your closing costs are also going to be in that general 3 to 5% range. What are closing costs? Well, they're what you pay the lender, they're what you pay the title company, and they're a setup of your escrow account so that you can pay your taxes and your insurance as part of the payments. A lot of people ask, well, how does that work? Well, taxes are paid in arrears. In other words, we're paying for last year's taxes. And because of that, you have to have the money in the account for this year when the taxes come due. And that money has to already be there to pay it. They can't wait for your payments for 12 months to pay taxes because they're already going to come due during that period of time. And so that catches a lot of people off guard because we see zero down programs, and that's true, but there's still closing costs. So we have to factor that into the equation as well. And that's part of the discussion that we have is what do you have set aside to buy a home? And then we work from there on whether you need down payment assistance or seller paid closing costs or a combination of both or exactly how we can get you into a home in your situation now, or whether you need to save more, prepare more, change something to find a little bit better terms.
Okay. Another great question would be, what are the upfront costs when buying a home? Well, first thing is that you would um, be required to have down payment money unless you're using some type of down payment program. You are required to have earnest money. You are required to pay for an inspection, and you're also required to pay for the appraisal. So those are upfront costs that you will be responsible for. So it's very important for you to talk with the lender and let them know what type of reserves that you have so that they're able to calculate all the numbers for you.
we have a question here about buying a multifamily or more than just one unit. And sometimes we see on the internet that your first house should be a multifamily. And that is a great strategy. Let's say that you're renting now and you're looking to get in a better situation when you buy a house. That's not always possible when you buy a big house. But when you buy a house that has 4 units, for example, the other 3 people making their rental payments can cover your mortgage payment. So this is a great strategy that a lot of people use. It's not limited to first-time home buyers, but it is a great strategy that many people use to lower their cost from what they were paying in rent to what they're going to pay as a homeowner. And it's a great way to start in investing in properties and real estate is by getting a multifamily. Now, they're not always available in every community, and they're not always available at an affordable price. But a lot of times, if you do find that opportunity, the renters will make your mortgage payment for you, and you can't get any better than that.
A big question most buyers want to know is, do I get my money back if I change my mind? That's a great question. Now, you have a due diligence period in order to have an inspection. And so that is the time that will allow you to make a decision as to whether or not you want to move forward with the transaction or whether or not you found some things on the inspection that you're not satisfied with in moving forward. At that time, you would have to terminate the contract before the end of the due diligence period. Sometimes you're given 5 days, sometimes you're given 7 days, sometimes you're given 10 days. So it just depends on the amount of time that you're given to have your inspection done and have it completed. So if you move forward after the due diligence period, there may be some times where if the seller decides to default on the transaction, then you would get your refund back. But if you're not approved for your loan, then you're able to get your refund back. But if you decide to default after that inspection period, then you will not get your earnest money back. So those are the different ways that you can get your refund back or not. So I think that, we've gone through, the steps to purchasing a home. We've gone through some lender requirements and guidelines. We've gone through some myths about buying a home. And so I think that, in having this information, this is a great start for anybody that is interested in buying a home. Corey and myself, we're here to answer any questions or concerns that you have. Anyone that is on the webinar, if you're interested in scheduling an appointment with us where we can set up a consultation with you, he's more than happy to do so to get you pre-approved. I'm here to assist you as well and trying to help you find your new home. So anybody that's interested in scheduling that appointment, we would love to assist you at this time. So we thank you for attending this webinar. I hope it's been, great information, that you received, and that, if you know of anybody that's interested in buying or selling, that you will keep us in mind. And we thank you for attending. Uh,
Yes, thank you, Gwen. Appreciate it.
yeah, you're welcome, Corey. Thank you all, and have a good evening.